What's up, guys? It's Mr. Fit to Flourish. In this video, I'm going to be talking a lot about indicators and how to really have confluence or to have evidence that your trade is going to be working in the direction that you think it will. So pay attention to this video because it's going to be pretty gas. To be able to make sound investments, you need to know what's going on. So good inferences can be made when you are able to read candlestick charts. So the charts are trying to tell you something. So analyzing charts using the sticks, indicators, and patterns, it's known as technical analysis. Technical analysis is used by traders largely on shorter time frames, and they use technical indicators, and it's used to help traders get some insight into supply and demand. They are used as buy and sell signals. Many indicators are just more noise to make you freeze while trading, but here are some indicators that actually really work pretty well, especially when you're day trading and swing trading on the short-term time periods. So the Saudi ATR levels, EMA, so that's the 9, the 20, the 50, and the 100, and the 200, which is exponential moving averages, and VWAP, which is the volume weighted average price. Other indicators that you can look at on your own time include like OBVs, accumulation distribution lines, the MACD, RSI, stochastic oscillator, Fibonacci levels. So what is the EMA? So the EMA is basically the exponential moving average. Stock prices typically move to and along the EMA. So if price action is above this moving line, it typically stays above, and if price action is below, it typically continues down. So price typically tests this line and bounces off, and it's better than the SMA, which is a simple moving average, because the simple moving average doesn't respond to price change as fast as the exponential moving average. So it does use one less data point. The SMA does, so that's why it's not as good. The 50, the 100, and the 200 MAs or EMAs are used as indicators for longer term trends, while the 20 MA is for shorter term, 20 and the 9. The 20-day EMA is extremely useful for swing trades, and the 9 EMA is useful for intraday swings, and you can also use the 9 MA and the 20 MA and calibrate it to the 5-minute time frames when you're trading intraday as well. So as price action continues, the yellow line continues calculating the last 20 bars average price. So if you're on the daily time frame, it's going to calculate the last 20 bars, which are the last 20 days. If you're on the 5-minute time frame, it's going to calculate the last 20 bars, which are on the 5-minute time frame, which would be 100 minutes. So it calculates the average price using the most recent data points. And like I said before, typically if you're above the EMA, then it continues to the upside, but if you're below it, it will continue downward. So the EMA acts as a magnet to attract price. And the EMA is typically tested multiple times. A crossover of the EMA signifies a reversal if it's strong. Crossover signifies a reversal if there's a strong signal bar that breaks through. Wait for confirmation before getting in on the reversal. So what are characteristics of strong trends? So strong trends typically have big gap openings, trading in one direction for more than 2 hours, and few counter trend trade opportunities. Also, bars with no tails in either direction show you a strong trend or a strong bar, and no significant trend channel line overshoots. So we talked about trend channels. So if you stay within that channel, then you know that the trend is probably strong. Is VWAP. So VWAP is the volume weighted average price, and it shows the average price of a stock relative to the volume, the total dollar value of trading divided by the volume of trades. So that's what VWAP is, the total dollar value of trading divided by the volume of trades. And this is calibrated for specific trading sessions. Last but not least, the Saudi ATR levels. So these use Fibonacci levels as well as the average true range to help you decide when to buy and sell stocks. So it's a complex formula, and it's used to give you levels where to enter and exit trades, and it can be adjusted for swing trades or day trades. So here's an example of the Saudi ATR level. The yellow line is the line that if you get below this line, typically sells work really well. So if you're going to be looking to sell, it works really well. And then the gray line in the middle is the line of the previous trading session's close. And then the blue line is basically a call zone or the long zone. So if you get above the blue line, typically you want to buy. It shows you that if you get above that line, then buying is strong and you want to buy stocks. So you can use indicators to kind of gauge or to back up your thesis on whether or not to go long, which means to buy, or to go short, which means to sell. Good morning, welcome to the Fit to Flourish podcast. Let's talk wellness, finance, and growth.